Welcome to Explain the Charts, your go-to channel for in-depth market analysis. Today, August 15th, 2025, we're putting Alphabet Incorporated, ticker Google, under the microscope, looking at both the current events shaping its narrative and the raw data from its price charts. Starting with the news, Google's recent Q2 2025 financial results, ending June 30th, 2025, reveal a mixed but generally strong picture. Total revenue surged by 9.39% year-over-year to $96.54 billion, indicating robust growth in its core businesses like Google Services and Google Cloud. Free cash flow was particularly impressive, jumping by nearly 70% year-over-year to $5.3 billion, signaling strong operational efficiency. However, net income and EPS, while up significantly year-over-year, both saw a notable decline quarter-over-quarter, which can be a point of concern for some investors. On the bullish front, recent reports highlight Google's strong position in the ongoing AI boom, with its Gemini AI model gaining significant traction. Investors Business Daily, just 26 minutes ago, reported on a Bitcoin miner's substantial $3.7 billion AI hosting deal and a Google stake, underscoring the market's enthusiasm for Google's AI infrastructure. TipRank's new AI stock analysis tool has even given Google an outperform rating, citing the AI boom and a rebound in digital ad spending. This positive sentiment from analysts is reflected in a moderate buy consensus rating from Wall Street, with an average 12-month price target of $211.53, suggesting a decent upside from current levels. Conversely, significant bearish headwinds exist, primarily stemming from regulatory pressure. News from 2 days ago indicates Wall Street is awaiting a judge's ruling on remedies in Google's search antitrust case. Adding to this, there's even been an audacious offer from Perplexity to buy Google's Chrome browser amidst this DOJ antitrust case, which, while unlikely to materialize, highlights the intense scrutiny Google faces. Technical concerns include a slight dip in global search market share in May and a 2% year-over-year decline in U.S. user visits, raising questions about user engagement. Now, let's turn our attention to the charts to see how these events manifest in price action. Looking at the daily chart, Google is currently trading around $202.94, very close to its 52-week high of $207.05, which was recorded on February 4, 2025. The stock experienced a significant dip, hitting its 52-week low of $140.53 on April 7, 2025, marking a crucial support level. Focusing on the period from April 7, 2025, to the present, you can clearly see a strong bullish reversal. The stock has rallied impressively from its 52-week low, showing sustained buying pressure. Volume has been relatively healthy during this uptrend, confirming the strength of this recovery. The previous high around $207.05 to $208.70 now acts as a significant resistance zone that Google is currently testing. A decisive break above this level on strong volume would be a very bullish signal. Transitioning to the 1-hour chart, which covers from late July to early August 2025, we can observe the more granular movements. Please note, our hourly data only extends to August 5, 2025, so it doesn't capture the most recent days. However, within this time frame, we see a clear upward momentum from around $188 on August 1st, reflecting the positive sentiment that led to the Google breaks out news reported earlier this month. High volume accompanied the surge, indicating strong institutional interest. Now, let's zoom in even further to the 15-minute chart, covering the last few days up to August 14, 2025. This level of detail helps us spot intraday reversals and immediate price reactions to news. Notice the sharp decline on August 13, 2025, specifically around 1827 Universal Time Coordinated. The price dropped from approximately $202.50 to $197.50 in just a single 15-minute candle, accompanied by extremely high volume. This coincides perfectly with the news of the antitrust case developments and Perplexity's offer for Chrome, demonstrating how quickly negative news can impact a stock. This rapid sell-off was likely triggered by algorithmic trading reacting to the headlines. Following that dramatic drop, Google did see a partial recovery on the same day and into August 14th, finding support around the $201 level. This suggests that while the news created immediate panic, underlying buying interest remains strong, potentially from those betting on Google's long-term AI growth. The stock managed to close August 14th, 2025, just under $203, indicating resilience. So, what does this mean for traders and investors? For the short term, Google is currently testing a significant resistance zone between its current price of $202.94 and the 52-week high around $207. A breakout above $207, especially on strong volume, would indicate continued bullish momentum, potentially targeting the analyst high forecast of $240, though this is less likely in the immediate short term. However, if it fails to break above this resistance, we could see a pullback towards immediate support at $201, which has shown to be a bounce-back point on the 15-minute chart. Below $201, the $190 to $195 range established in late July and early August could serve as the next significant support, reinforced by the positive momentum from that period. Long-term, the bullish case for Google remains compelling due to its strong core business, dominant market position, and aggressive expansion into AI and cloud computing. The 52-week low of $140.53 is a critical long-term support. A breach of this level would signal a significant shift in trend and a strong bearish outlook. The average analyst target of $211.53 suggests a moderate upside from here, reinforced by its moderate buy rating. The long-term outlook appears positive unless the antitrust case delivers a severe, unexpected negative outcome, which would likely send the stock towards lower support levels, potentially $160 to $165 first, then possibly even testing the $140.53 low again. The likelihood of a strong bullish trend continuing is moderate, around 60%, given the strong Q2 fundamentals and AI tailwinds, assuming the antitrust outcome is not catastrophic. A significant rally past $207 would reinforce this bullish conviction. Conversely, the likelihood of a short-term bearish reversal down to $190 to $195 is also moderate, around 40%, especially if the $207 resistance holds and the antitrust news continues to generate uncertainty. Traders should closely monitor the outcome of the antitrust ruling. Any severe penalties could cause a sharp downturn. Also, watch for continued reports on AI adoption and digital ad spending trends, as these are fundamental drivers. Keep an eye on trading volume, especially around key price levels, as it often confirms the strength of price movements. Heavy selling volume on a dip below support or heavy buying volume on a breakout are important signals. Thank you for joining Explain the Charts, and we look forward to bringing you more insights soon.